pull down for the markets as we've now dipped into the red at 14,695, and you've got the broader markets this time around which are taking a far severe knock. Let's just run you through the top drags on the frontline index this time around which are taking a far severe knock. Let's just run you through the top drags on the frontline index. A lot of the shining stars that we've seen in the previous trading sessions are seeing some profit booking. Coal India, Hindalco, Tata Steel, Grasim, as well as ONGC, JSW Steel, Titan and TCS. While on the flip side, Asian Paints continues to hold strong. UPL, ITC as well as Nestle and Britannia are in the green. But let's also take stock then as to what the outlook is when it comes to earnings, the outlook on the key trends as well. And joining in right now, we've got Seshadri Sen. He's the head of research at Alchemy Capital. Good to have you on board. Many thanks for joining in. With now most of the companies having already come out with their earnings, this is from the Nifty 50 large caps, a lot today as well. Our assessment is that majority of them have reported a strong set of numbers despite a fairly tough environment. How have you viewed the earnings so far?
Thanks for hosting me on the show. Hope you and your viewers and your loved ones are safe and healthy in this really difficult environment. As far as earnings are concerned, it's been, the earnings have been strong at a headline level. But if you look at, comparisons vis-a-vis consensus, there's been a bit of hit and miss. There's been a reasonably large number of companies which have reported below the consensus forecasts. But I don't think that's a very serious problem at this stage. If you look at the broader Nifty earnings, you saw an earnings upgrade cycle that started after the September earnings results were done. That cycle seems to have, if you're looking at FY22 earnings, seems to have now plateaued out, and you're seeing slight corrections. And I think that plateauing will continue for the first half of this year, because the full impact of the slowdown in the first half of FY22 hasn't, I don't think, fully been factored in. So broader earnings will probably, correct a little bit over the next couple of months. But then there's a lot of devil in the detail. There's some sectors which will probably see upgrades and other sectors which will see downgrades. So I would say it's a fairly neutral earnings season from whatever's come through so far.
And what about the results that we've seen in the broader markets, mid and small cap stocks? The general sense is that you could see some mighty degree of outperformance when it comes to earnings from the broader market basket. Is that something that you concur with? And how have you looked at the numbers? Is there anything or any particular companies or businesses that have stood out so far in Q4 according to you within the broader markets?
Yeah, I would define the broader markets more in terms of sectors than market cap categorizations. And yes, there are certain sectors which are seeing a lot of earnings momentum, a lot of upgrades, and that is where I think a lot of the outperformance would also come through in the next, throughout this FY22. Those, if you're seeing, for example, industrials and commodities, fairly obviously we're seeing phenomenal momentum in the commodity sector. But even apart from commodities, industrials have been reporting fairly healthy earnings, and you're seeing plenty of upgrades coming through. Pharma and chemicals is another space where the earnings momentum seems to be strong. Those are sectors that have been doing very well. IT has been a bit of a mixed bag, but clearly the outlook for IT remains much stronger than it was, say, 6-8 months ago, and that is playing out in the stock prices as well. So I would say that as far as the broader markets are concerned, there are certain pockets, industrials, pharma, chemicals, etc., where earnings upgrades would remain fairly strong, and earnings momentum would also be so strong for FY22.
Do you see demand also being impacted, due to the current uncertainty? And how do you see the impact as well on consumption plays in that case?
Yeah, consumption will be a little tricky through this year. For starters, yes, demand will be impacted because while the lockdown hasn't been as severe as last year, there has been localized lockdowns, and that will impact consumption to some extent. It's also a little uncertain as to when this is lifted, how consumer behavior will pan out. The default settings, thinking is that there will be a strong rebound in demand after the lockdowns are lifted. But one will have to wait and see how that pans out. But having said that, the stronger companies in the consumer sector will no doubt come out very strong after the lockdown is lifted, as they did last year. The other headwind to the consumption sector is input price inflation. And at some stage, they'll have to think of passing those on. Some of that has already started to the consumer, and how that pans out in terms of consumer demand, we'll have to wait and see. So the short answer is that yes, consumption demand is likely to be affected through this year. Even if there is a bounce back after the lockdown, but stronger companies will be able to withstand that, and we're seeing that play out where some of the market leaders, their stock prices are far more resilient than some of the smaller companies if you go sector-wise in the consumption space.
High input prices, commodity prices, they are already having an impact on margins when it comes to companies, and that pressure is continuing. Do you see companies having pricing power? How long do you see this pressure ongoing? Is it going to be a real concern in the oncoming quarters?
Yeah, the rule of thumb is, it is a rule of thumb, so it's a little crude, is that when you see input price pressures of this quantum, a third is passed on, a third is absorbed, and a third is passed on, a third is absorbed through the margins, and a third is taken out over a period of time. Now, the problem here is that a lot of companies cut costs very aggressively in FY21. So their ability to cut costs outside the raw material space is somewhat little. So that last third, which they expect some operating leverage to even out in the second half of the year, will happen. But in the short term, the short answer is that gross margins will be under pressure. And in the first half of the year, it will be difficult to pass that completely on to the consumer. The company will have to take a little bit of that on the chin.
Okay. UPL has reported some pretty strong earnings. On the agri-fertilizer names, what are some of the kind of trends that you've observed?
Yeah, the agri space, I think, part of the overall chemical space should remain fairly strong throughout. One, demand remains fairly robust. Of course, it is dependent on the monsoon, which we cannot predict, at this stage. But that is one space which we the overall chemical space, including the agri space, which we like. We think demand is strong. Pricing power is coming back to a lot of the players. So we are seeing both growth and margins play out fairly strongly. Many of these companies have strong balance sheets, decent return ratios. And that is an area where a lot of, we've seen, phenomenal stock price performance in some of them already. But we think that is a place which will area which could play out over the next year or two as well.
Right, thank you for joining us. We'll have to leave it there, but great speaking with you and getting a sense of how trends are evolving currently. Let's take a very quick break. We'll be back with the management of Voltas. Mr. Pradeep Bakshi will be joining us after this.